So, Shipra, at Transworld, as you were building your emissions data infrastructure across the multiple business units and geographies, how did you approach getting the different teams from, say, like all the cross-functional teams to consistently collect and report the data that you needed? What were your practical challenges? Can you please tell us?
So I will start from, I think between Prakhar and Karan, both of them have actually said a lot that I was going to say, but I'll just kind of package it in terms of how it worked for us. So your ESG and sustainability journey is not like a one-time task that you're done with and it's over. It's an ongoing journey. It evolves and it goes on, and I think, while we're talking about a lot of regulations, a lot of regulatory implications that you may have, it is also a conversation that a business should have internally. Because while you're reporting to meet those regulatory requirements, this is something that your stakeholders, other stakeholders are also asking. This is something that helps your business to become a more resilient, sustainable business in the long run. So while we were having this conversation, and I'll give you like an example of how it worked and did not work for us very briefly. We started this exercise in 2019 and 20. And we were like, what do we do? How do we get started? So we firstly, as Prakhar also mentioned, we set our boundaries, we set our scope. What geographies are we looking into? What businesses are we looking into? And then we found certain frameworks and standards that were applicable to our industry. And I think that's the first and foremost thing that any company that's starting the journey should start with. And once you are done doing that, then you have your at least the border and the map clear, that okay, this is what I'm supposed to do. Now the most important thing is, how do you do it, right? So I think to do that, we realized we needed both top down and bottom up approach. It had to work in alignment with each other. So while we got a lot of support from the board and the leadership, we created a decentralized system within the organization, which meant that we had our board stewarding the whole initiative. Board oversight was very, very important. But at every business and geography level, we included leadership in the ESG core group, as we say, sustainability core group, which had the leadership as well as the financial head of that business. As Karan was saying, that a lot of companies don't involve your finance people at an early stage. We realized that this is a conversation which has to happen at a business strategy level, not only at reporting level, or not only like, okay, let ESG sustainability team put together data and carry on. So we created these ESG sustainability mentors and put a lot of ownership on them and a sense of responsibility, in them to own this. And further down, we created ESG champions, who were people in these business teams, and we identified where we needed data, where we needed to run initiatives. So we identified these professionals as ESG champions because they also felt a sense of ownership. My task is leading to something that is impacting companies' performance, companies' business. So these champions actually became foot soldiers for us. So they were the ones who were working on a lot of data. They were the ones who were working on running initiatives. So that's how I said, we work top down, we work bottoms up, and we worked a lot on spreading awareness, creating education amongst anybody and everybody within the organization, and also our value chain partners. So we ran, what does ESG mean for you? Every segment had a connect. How can you contribute? Even a simple data point. Somebody who's actually putting together, as one of the speakers also said, that a lot of people look at your scope 2 emissions from the financial lens, but not from, say, what is your footprint, what are your emissions. So for them to say, putting this data, you're contributing to this. So that sense of ownership, responsibility really helped. And definitely having a tech platform, we did have a platform at an early stage, helped us also integrate it with ongoing systems. So whether it was our ERP, we could actually do a lot of integration. So it really helped us also cut down on manual labor or manual work that any or duplication of work that anybody had to do. The challenges we had, and I want to say that please, please, please own your data. Always own your data, because it will always help you to understand where your gaps are and how you can improve. So owning your data and governing your own data is always very, very helpful, Namrata.
Thank you, Shipra. This was this gave the closing thing to the challenges that Prakhar said that generally companies face. Karan said, how can we address them? And you literally gave us your first-hand experience. So excellent insights from all three perspectives. And this brings us to like my final one point answer. I will open this to anybody who wants to jump in. So, what is that one thing that you would say that companies overlook when building their emission data infrastructure, which comes back to haunt them later?
It's already answered, which is the
Yeah,
ownership of data.
yeah, own your data. That's the key.
Yeah, which applies to all three of us. I think the three of us feels the same.
Perfect. And we come to the end of the first segment, and I can see that there are some hands raised. I think you have questions. So stay tuned, all the audience members. We will have a question answer session very soon. Please stay tuned. And with this, we would go to segment two. So again, Prakhar, back to you. Once companies have their data foundation in place, the next challenge is probably setting targets, and which are both ambitious as well as financially viable. So, what does it mean to build, say, finance-ready targets? Can you please throw some light on it?
Yeah, sure. I think, and largely, I mean, we have understood how the base is created. I think the next step is again it's a pathway which has to be taken. So it's not a one-stop decision or a overnight decision which happens and then you can announce the targets. That's not the case. But the journey which starts potentially with I mean defining the complete pathway. So you have to take certain decisions. The primary decision is what is your base year on which you set the pathway. Most of these decisions are connected to an absolute number, and that's how global benchmarks are defining it. So today, let's say, for example, if we are emitting 100 tons of emission and we want to achieve the target of 1.5 degree as per the Paris treaty, then this becomes your base. So we have to pick up an year which becomes my base, and that number becomes my absolute number. So to reach to that point, I think whatever we have discussed up till now has to be concrete. We should own the data. The data should be properly validated because that data becomes your primary start point. So that is my, let's say when I start a race, I start from a start point. That is my start point of announcing a decarbonization journey. So that's the first decision which any company has to take. So what is the start point? Once the start point is defined, then probably the pace has to be defined. So how fast you'll run this race. And this again depends on various factors on ground, which industry you are from, how much technical advancements are happening, what global benchmarks you are targeting, what are your stakeholder expectations. Let's say, for example, you might be working with certain customers which are running with the speed of 100. So you can't run your journey with the speed of, let's say, 20 miles per hour. So that is like that. So if your customer is expecting them to get net zero by 2030, for example, or 2040, for example, overall alignment has to happen. Same with regulatory. Let's say, for example, something like India. India has announced its own target to get net zero by 2070. But certain countries like UK and others have a very early targets. So obviously the regulatory push within the organizations, within the countries and the companies would also be to run at a faster pace. So that is the second thing wherein you have to define what is your end looks like. What is your last achieving or achievable date, considering all of these factors. Once you do that, then you have to also consider your current speed of expansion. So let's say, for example, I am already running on a business which is growing like a 2x or a 3x year on year. I have my plans to expand my new factories already announced. I mean, within the next 2 years, I'll acquire three more factories and my base itself will change. So today, what the base I'm sitting on will go 2x or 3x. So when will I peak in terms of, let's say, the emissions? So that has to also be determined while defining these pathways. The last but not the least is also from a feasibility of technology perspective. What technological solutions are available to mitigate my emissions? How do I? What will be my operational impact? So let's say, for example, if I am looking for transit, and if my major emission is coming from a set of fuel, let's say coal, for example. I'm just taking an example. If coal is the primary source of emission today, I have. What are the alternatives I have to move away from the coal? How operationally it is effective for me, what will be the value I will be paying, what will be the payback of some of these technologies. Although if you see globally in terms of the outcomes, and Shipra and Karan can also stamp what I'm saying is most of these technologies are better in terms of the payback. So although initially it looks like a heavy investment, but then their payback is good, and then you get a good return on some of these technologies like adoption of renewables and then switching off the fuels and so on, so on, so forth. So uh, all of these decisions has to be determined and needs to be aligned. So that's a broad pathway in terms of all the decision matrices which has to be considered before jumping into announcing anything.
Understood. It's a nice analogy that you gave, that competitive world out there. So it's a race. It's not a option anymore. It's not even a journey. Probably it's a race now. So if you were to circle down to what is the biggest mistake that companies generally make when translating the climate ambition into, say, investment decisions or targets, what would it be?
And I'll go back to the same analogy, which is the race. And if you consider, let's say, like an F1 race, it has so many laps and pits during the whole process. It is like the same. So it is announcing the target and achieving the target. Companies usually mix them, and they have these pre-thoughts of how do I achieve? How do I say I'll go net zero by 2045 or 50? There's no technology available today. That's not the end. So announcement is not the end. What has to happen is every year you have to evaluate what has happened, what changes have happened, and that's what the expectation of the global community is today. So they are not pushing you that you have said 2040 now. I'll kill you or your business will go flat if you don't achieve 2040. That is not an expectation. The expectation is you announce the race and you announce your speed. And then every year you then gear up with that speed by realigning, uh, redeciding. Even when you announce formal pathways like SBTI, science-based target initiatives, and you even commit to them, they also give you opportunities to realign your target. So that has to be factored in while taking some of these decisions. That it is not that it's something which is committed and you have to follow that for life. It is something which has to be evaluated here.
Okay, nice. So I think that brings us to how do companies actually do it? So Shifra, I'll again turn to you now. Prakhar talked a lot about how decisions need to be made. So can you kind of maybe walk us through some real life example of how leadership make the decisions because you have a limited budget? So can you please throw some light on it?
Sure, sure. And I think I'll pick up from exactly where Prakhar left. And Prakhar, we are part of that journey. And for everyone's benefit, so Transworld has announced that we are going to be carbon neutral by 2043. And this announcement happened almost 4 years ago. And while we were, in this journey and we were evaluating our progress, we were working towards our target. We also realized that do we just want to be carbon neutral? And technology evolved in the meantime. We understood how we can actually achieve our long term target and mid term targets and near term targets. So now we are actually relooking at these targets and working towards decarbonization journey and then eventually net zero journey, and we are reworking on how we want to achieve that. So as Prakhar said, that it's important to start the race, understand your pace, and then it's a journey. It can always change its paths. And the way we look at it is when we're looking at it, say, integration of capital allocation and also enterprise risk. We view it in terms of what can be achieved. So it's in terms of an investment today, it might look like financially very heavy, but what would be ROI in the long term? So we always look in terms of and what kind of risks it would cover, what kind of risks it would mitigate. I'll give an example of our scope 2 emissions for that purpose. We mapped our emissions regularly here in Dubai and also in India. And we realized that investing in a solar plant and moving to renewable Right now, it might be a little, capital heavy, but in the long run, it is helping us also becoming transitioning from the energy to renewable, and then also in the long run, it was also helping us in certain cost savings. So that transition and that decision was taken by the management, and we are working towards it. In fact, in India, a lot of we could also get certain benefits and incentives to actually move early on and transition early on to renewable. So I think this is an example that I'd like to give. So we what we do is every time any project comes, uh, and if there are two projects that are financially comparable, the one that has a stronger sustainability lens always wins for us.
All right. Thank you, Shipra. I actually had this question for you that how do you convince the board to take up something that is, say, long, giving you results in long term? So you already answered the question for me. So thank you so much. Thank you, Prakhar and Shipra. And I think we can go with this target setting discussion that we already have, how to make decisions. I think we can now jump to the next segment and which is capital allocation and governance. So we have already had a lot of discussion around it. We already created a good base for it. So I think I'll come back to you, Prakhar, on this. So we have talked about, as I said, about the data infrastructure. We have talked about finance ready targets. We have talked about um, all the things that are needed as a base. So now when it comes to an execution phase, so as an advisor, who you probably work with a lot of boards and a lot of leadership members, and then how do you help them align finance, sustainability, and procurement teams? Like everybody, I think there is a lot of bureaucratic overhead. So how do you work with with your clients to bring everybody on the same page? How do you do it?
Yes, I think the first piece of thought which I always put on the table is that look it like a democratic process. It is not a one team or a one role process. I mean, it is impossible for let's say a sustainability team or let's say a finance team to achieve these targets. It has to be democratically defined across the organization, and it is one thing which connects the complete organization. I mean, it is one of the decision which has an impact on connection to the complete set of organization, because the type of data we are talking about, the flow of information we are talking about, and the decisions we are talking about are all connected. You have to onboard the operational teams, because if they buy assets, they create setups on operational grounds. It has a big impact on what kind of decision they are making on ground. You have to connect the finance teams, because what if they do M&As which doesn't fit in your bucket? Tomorrow they acquired something which takes you off from your target. They are investing in a technology which might improve or impact your target. So they are very much involved. Supply chain team is very much involved, because of procurement decisions they are making. What kind of factors they have embedded from an ESG perspective or a target setting perspective? How are they evaluating the new supplier and supply chain partners on some of these processes? So it's like a team game. It's a connected process wherein it's a team game. It's not an individual game, and all departments have to closely work in sync to achieve to the target. Some examples I've already talked about, like how it can derail. Like as I said, an M&A decision, wrong M&A decision can completely derail your targets, or vice versa. A target which you have taken without considering the growth which has been discussed at the board level or the management level, which they have already planned. So they have already planned opening 10 new factories. As a sustainability team, you are not aware of, and you have taken all the decisions based on the current repositories which you are sitting on. And tomorrow everything is going to change for you. So it will be a nightmare for you to realign if you are not aware of these decision making. So one thing which most of the companies are doing today, I mean, mature companies, when they are getting to that level, they are doing is they're setting up uh, a board level committee. So you have a board, then you have a board level committee which is set up, and under that there is a working committee which is defined. And then most of these decision and the implementation responsibilities goes to that working level committee, which has representations from all of these departments. All of this get then report to the board level committees, and then board gets the insight in terms of how some of these things are happening around. So that's how you stitch the gap. I hope that
Understood.
answers.
Yeah, yeah. So you again kind of reinstated the point that Shipra made. It has to be both bottoms up as well as tops to bottom process. So, while you have explained to us how an ideal scenario should look like, but I can imagine that execution would require systems in place. So, I think that will bring me back to Karan as to how do you help companies to maybe maintain a single source of truth via technology? How do you align and how do you help them?
Got it. Right. And I think as Prakhar also just spoke extensively in Shipra as well on governance frameworks. Yeah, governance frameworks are going to fail, right? If they continue living on your PowerPoints and Excels, right? Instead of smarter operational systems, right? So when you talk about a single source of truth, right, we're not just speaking of a database, right? What we really need to strive for is to create ecosystems, right, where your database, your emission calcs, your reporting initiatives, your on-ground initiatives, right, capital decisions, decarbonization journeys are all connected, right? Because all of them, either directly or indirectly, are very, very reliant on each other, right? So, companies that are really looking to do this, right, from my understanding, should probably look at integrating 4 layers, right? From an overview perspective, one is obviously the measurement layer. Right, because you can't manage something that you can't measure, right? So, think of your net zero decarbonization target as, let's say, I want to lose 20 kgs of weight, right? You wouldn't know how much weight you need to lose in the first place if you can't measure it, right? And then the more data you have, right? You do a DEXA scan, you have in data into, for example, your BMI, etc. Right? You're able to also sort of cater to then what is required to go ahead and make those decisions, right? So the second layer there would be your decision layer, where you're linking your specific activities to the data that you've already managed, right? So whether that's abatement, impact, or cost decisions, right? They all sort of fall under that. Then you would thirdly have your financial layer, right? Because again, going back to that analogy, if you were to lose weight, again, right, you're paying for gyms, right? You need to budget for, let's say, certain dietary restrictions, etc. Right? So it's very important to ensure that your finance team, right, and your corporate strategy is aligned with the decision making that's sort of happening at the sustainability level, right? So that again becomes important. And then the last thing, and probably the most important, is the governance layer, right? Which I think we spoke extensively about in sort of the first segment. So I won't really dive too deep into that, but approval workflows, data ownership, progress tracking becomes very, very important, right? It also depends on the type of company you are, right? So if you're a lean single location SME, in most scenarios, I wouldn't even recommend, getting a smart tech stack, right? To start with, you already have access to the basic requirements in order to track your data, right? And also sort of maintain a fairly decent audit trail, right? So the honest trick there is to just start. Automation and digital solutions become very important at scale, right? Because manual ESG tracking will collapse at scale. So once you cross multiple locations, geographies, right, then human coordination, evidence management becomes a bottleneck for the measurement layer of things, right? And without the measurement layer, the other three layers don't really exist. Right. So what the digital infrastructure will then allow you to do is also tie it back to cost. So we invested, for example, X dollars, right? And how has that impacted the strategic decision we made, let's say, to decarbonize by 2043, for example, right? And that will really help you close loops, when you look at ambition versus execution.
Very, very well explained, actually, Karan. That I already had some questions. How do you think technology will help us? But then you already kind of built a one body thing that after a certain point, technology just can't be optional. It has to be there, otherwise the systems would collapse. So thank you so much, and I would now like to go towards the final segment, which is about funding. How can we have financial instruments, and how can we basically get some help while we are doing our decarbonization journey? So, I'll again come back to Prakhar. So, what funding sources beyond the internal capital should organizations be exploring? How are we have heard some things about green bonds and sustainability linked loans and such things. So, would you please throw some light on how can companies take advantage of such things?
Sure. So there are again two layers of kind of fundings which are available in the market, or uh, methodologies which are promoting companies to adopt some of these things in the market. The first layer is credit methodologies or credit mechanisms, wherein you are getting credits of your good work. Let's say, for example, if I have already set up solar parks and solar plants, and I'm generating excess energy, I can sell it like a credit, so that generates additional revenue for you, and then you can cover that out with respect to your additional investments which we have done. While doing the payback calculations and all of this is also factored in. The other part which usually companies consider while taking some of these decisions is also how much how much cost savings they might do while transitioning to some of these sources. Like, say, for example, if I'm switching on to solar, or if I'm switching on to a different kind of fuel, whether I will be making any improvements in every OPEX cost which I'm spending. So how much that would be, and how much that differential money which I will be saving, and what is the lifespan of, let's say, getting the complete money back. What is the payback period? Again, from a payback perspective, that calculation is embedded. So that is one layer of doing. There are also innovative credit programs which are coming up. Like in India, government has recently announced a program on green credits, wherein government is pushing companies to own certain lands which they will provide, and grow trees on that land. And with that, they will then eventually, after 3 or 4 years, will start getting some credits of that trees which they have grown there, and then maintain that greenery and such. So that is also kind of additional initiatives which are happening in the market. So these are level one, wherein you can get credits, or you can sort of trade credits. The second level which you have already covered is raising fund. So alternative sources of raising fund, or cheaper sources of raising fund, likes of green bonds. So just a day before yesterday, it's a stat which has been published. It says that the overall Middle East market for fundraise will go to around 26 billion, 25 billion to be very specific, by 2026. So there are a lot of opportunities which are coming up with respect to raising green bonds, raising funds, uh, tied to your sustainability progress. So green bonds are usually tied with the capex outflow of how do you implement some of these strategies, and then you're doing capex, and then against that capex you are raising that green bond, which is having also a token of green initiative attached to that bond, and it has a lower cost in terms of the cost. That is one way of doing it. The other way of doing is the new initiatives of sustainability linked loans. So today, a lot of banks, especially banks like HSBC and all, which are global banks, are coming up with initiatives wherein they are tying your loan with certain sustainability linked initiatives, because it is also helping them. So down the line, if you see the person who is taking the loan is a value chain partner for the banks, and banks have certain targets to be achieved on financing some of these green initiatives. So what they're doing is they're linking the progress and this loan to a commitment. Let's say the commitment could be after 5 years, you will be reducing your emission by X value. If you do so, you will get a percentage of basis point reduction, because bank is also achieving along with you. So that's how the whole cycle is, wherein they are achieving, and then they're translating that in terms of an initiative or a promotional initiative to you in terms of reduction of basis point. Very recently, again, very innovative which has happened is, I think HSBC, day before yesterday or last week, they have announced that even EcoVadis score they will consider now. So even rating scores they have started considering from linking some of these initiatives. So your score was X, and if it has gone Y, you'll get a benefit in terms of these linked loans. So these are some of the programs which are there in market right now. So you have to go level by level. First, look for internal payback, convincing the companies on the current how the investment will get refunded, irrespective of you are taking a loan. And then the second is more with respect to getting it funded from a cheaper sources. So your cost of funding will go lower if you opt for some of these initiatives. So these are two broad methodologies which are available.
Thank you, Prakhar. Thank you, Prakhar, for throwing light on how companies can actually also financially make sense of the decarbonization journey. So I have the one last question, which I will direct to Shipra. I want to close with a strategic viewpoint from you. So, can you please add if you have had any experience with any of the instruments that are there out there? Did they help you, or any such story that you have?
Sure, sure. So I will, I think, pick up from where Prakhar left. It is very important to assess, you look at your internal cost savings. In the short term, we make decisions based on balancing in terms of, something solutions or that can reduce both cost and emissions. But in the long run, we are also assessing projects and initiatives that would help us gradually uh, move our capital towards low carbon assets or minimize our risks. And one example is sustainability linked loans, what Prakhar just mentioned. So we are in conversation now with some of our banks where we are an asset heavy and capital intensive industry, shipping, as you know. So this is actually helping us have a conversation with our banks based on our sustainability performance.
Okay, thank you, Shipra. With this, I think we can. I would just have one final say, if any of you wants to take up that question. Would you have one closing final actionable advice for our audience here as to throughout how should they go ahead in whatever step they are at in the journey? So if you have any one actionable advice point, and then we'll move to the question answers.
Namrata, I'll just jump in there as a practitioner. I would
Yeah.
say at whichever level you are, it is a journey. Okay, so it is a journey. Everyone can have different paces. If you've not started, please dive into it. Unless you dive into it, you will never be able to find the right path for you. If you're already in the journey, please keep viewing it, assessing it, because your paths can change. As I said, for us, we had to shift paths and shift. So I think it's a journey, in an ongoing journey. Regulations are helping us streamline this journey, but don't hesitate. And it's not no longer a choice, and it is no longer just to meet the regulatory requirements. It's also to build a resilient business which is future ready.
Yeah.
So I think that's what I would like to say.
Just dive in. That's what we need to do. Yes, perfect. Uh, if Prakhar and Karan, if you have anything to add, or otherwise I can go to the questions.
So I think just to add to what Shipra said, right, while we're diving in, I think it's also important for teams to sort of note that when you're designing or structuring your ESG, right, also structure your ESG or sustainability system or function internally the same way you would structure your company's financial system, right? In the sense that if you are of the belief that your CFO is not going to accept your carbon numbers, right? The same way that they wouldn't accept revenue numbers and you can't present it to them that way, right? Then you're doing something wrong, right? Because you need as much traceability and sort of granularity in this kind of data in the same way that you need granularity and traceability in your financial data.
Understood. Thank you, Karan.
Yeah, I think from my end, I largely Shipra and Karan have already covered. The only point is be future ready. I would say that if your driving force is compliance, and then also don't look for compliance which are currently active because it's a very, very fast evolving space. You don't know tomorrow what will hit you out. So look for how the compliance have shaped up in other geographies, other parts of the world, and it has the pace is very, very different in terms of how traditional compliances were shaping versus how compliance is linked to ESG and climate change are shaping. So it has to be future ready, whatever decision you are taking. You look for a larger future perspective.
Yeah, and remember, it's a race out there. You have to
Yeah.
start. All right. Thank you so much, all of you. I would like to take, we have two questions from audience member. Um, so Yashraj is asking, what are your views on the idea of a more uniform, globally harmonized ESG framework with similar standards across countries? Do you think standardization would enhance transparency and comparability for investors, or might it overlook important local socioeconomic differences? From a company's perspective, would it simplify compliance or create additional challenge? So you can either break and take parts of the questions, or one of you can answer the whole of it.
I think this is right up Prakar's alley.
Or even I can take a shot for it, but let me just quickly give my thoughts on it. See, whenever you are looking to start a DSG journey specifically or looking for compliances, it is not either local or global. Both perspectives has to be factored in. Although globally things are getting harmonized, the same thing is also happening in local countries. Your laws are evolving, your requirements are evolving locally. So what you have to factor is all the stakeholders. When you say stakeholders, it is your customers, your suppliers, your regulations, your presence, everything is important. So whenever we start any process with the company, we ask them to first sit down and then define what is required across the board. It could be rating agencies also, consider them also as a part of this process, and then define whatever you are defining, right? So it's not that you can only focus on local or global framework. Everything has to be considered.
So if I
Thank you,
can just
Vikram. Yeah.
Prakhar, if I can also just contextualize it to, how we are a diversified company. So if I look at it that if we have, say, global regulations which are cutting across all industries, it might not be relevant for a lot of industries because something that might be material to industry A might not be material for industry B. So while global standards would help companies, if you ask, benchmark, but it won't be the right benchmarking. And also from socio-economic levels, the journeys are at different paces. So I think putting it at the same benchmark may or may not work, in my opinion.
Thank you, Shipra, for adding your insights from the practical. I think you have had this experience firsthand. You are operating in different geographies. So I can understand that you might have faced such struggles in your journey. So thank you, Shipra. Thank you, Prakhar. And there is one more question, but I think it has been largely answered. So it's about how do companies um, practically approach the identification, measurement, and management of Scope 3 emissions. So while we did not specifically talk in detail about all the categories of Scope 3, but I think the data challenge has essentially been answered. And Karan had already made it a point that after you scale up beyond certain point, then you have to have technology in place. So I think that's it. But if you want to add anything, you may.
No, I think a quick thing that I can add here, right, is very specific in pertaining to Scope 3 is a lot of companies are sort of hesitant, right? Because Scope 3, I mean, from a public perception's also been made to look like this behemoth that's very, very scary, right? But the best thing that you really can do, right, is there are different methodologies when you go into Scope 3 calculations, right? So obviously, when you take a more simpler methodology like a spend-based methodology to calculate your emissions, right? It's not the most apt, but what it does allow you to do, right, is give you the high level estimate to at least identify your scope 3 categories that are driving the most impact or contributing the most to your emissions, right? So that will give you an understanding of where you really need to start or which categories you want to focus on. Then obviously the remaining part comes in terms of obviously your data governance and improving the quality of your data as well as the methodologies that you use to calculate scope 3. But I think for a starter, you can probably do that. Another very good thing that you can do if you're looking at scope 3 is also look at your peers, right? Because if this is the first time you're doing it, that doesn't mean no one else has done it before, right? So always go look at your peer data. Let's see the categories they're focusing on, and that should give you a good indication of where you need to start.
Yeah, that was very insightful. I understand a lot of companies struggle with scope 3 majorly. So thank you for simplifying it for everyone here, Karan. And with that, we have answered all the questions. And there's a lot of data points, lot of key insights. But if I just have to sum up in say 3 main points that remained with me, I would just say that own your data. Foundation is everything. You have to own your data. Second, I have already made a note of this that funding is evolving rapidly. So you can, of course, make use of that. And the last one I would say is dive in. So think long term, but act now. So that is something that has also stayed with me. Oh, yeah, Prakhar's point that it's a race. So start and then run. Yeah, so thank you so much, everybody. Thank you, Prakhar. Thank you, Karan. Thank you, Shipra, and for your time, for your expertise today. And thank you to all our participants for your engagement. For those who want to dive deeper into the UAE climate compliance or decarbonization roadmaps or ESG reporting support, please connect. I think you can see on the screen, you can see the scan code and the link and everything. You can connect with anybody, you can connect with any one of the speakers, and stay tuned for more webinars. Follow us on LinkedIn for updates and have a great day ahead. Good luck with your decarbonization strategies. Thank you.
Thank you so much, everyone.